Good evening. If you're in South or Southeast Asia, welcome wherever you're joining from. Um, I don't think we could have timed this webinar better. What a week it has been for Indonesia and Southeast Asia, with the biggest tech merger in the region being formally unveiled. Our lead story today again was about Credivo, which I think is a portfolio company of Alpha JWC mulling a US SPAC. Yesterday, there were reports of Indonesia's ticket looking at a SPAC. Traveloka will be unveiling their SPAC soon. And all of these developments apart, the biggest fundraising round in Q2 2021 that involved Indonesia's JNT Express, which bagged a little over $2 billion. So 2021 is emerging as a banner year for Southeast Asia, especially Indonesia, as the acceleration of digitalization and the expansion of the middle class has helped startups both in Southeast Asia and Indonesia sort of touch new growth milestones. And 2021 so far has been a turning point for Southeast Asia's startup ecosystem and its biggest market, Indonesia. If you look at the Google Tamasek Bain report, the GMV of Indonesia's internet-based economy reached 40 billion US dollars in 2019, and this is expected to grow to 133 billion by 2025. Indonesia is by far the region's largest digital market and contributes about 40% of the regional internet economy. We're going to be covering all of this in our webinar. And the topic today is move fast and make things. Big ideas, funds, and confidence power Indonesia's digital economy. To discuss this, I think I've got the best set of panelists representing all stakeholders in the ecosystem. I'll just quickly list our panelists, and then I would ask each of them to maybe take a minute to introduce themselves and the respective firms. Our panelists are Jeffrey Joe. He's a co-founder and managing partner of Alpha JW Ventures. Then we have Dr. Hatib Basri. He's a president commissioner, Excel Axiata and Bank Mandiri Indonesia. We have Anderson, who's a co-founder and CEO of Ajib. JJ Young, who's the chief financial officer of Gudang Ada, and Srijita, who's a co-founder and CEO of Reina. I'm just going to ask them to introduce themselves before we kick off the discussion. So Jeffrey, do you want to go first?
Yeah, thanks, Georgie, and hi, everyone. Glad to be here, and we are really excited to have this discussion today. So I'm Jeffrey Joe, the co-founder and GP of Alpha JWC Ventures. We are one of the earliest VC in Indonesia. We have quite a long track record, and we have invested over 2 funds now, over 50 companies in across Southeast Asia. We are in Indonesia-focused fund, and we invest in early-stage companies. We are really passionate working alongside great and visionary entrepreneurs and really having a more hands-on approach to really help them to go to the next level. And now we are actually seeing a couple of data points that in the market now, despite COVID, that like now is actually a very exciting times for all of us in the ecosystem. So I'm happy to share more about that later. Thank you.
Dr. Hatib, please go ahead. Dr. Hatib, can you hear me?
Oh, okay. Sorry, I can't hear you. My name is Hatib Basri. I'm a chairman of Bank Mandiri. TBK is one of the largest bank in Indonesia. I'm also teaching at the Department of Economics at the University of Indonesia and former Minister of Finance.
Srijita, over to you.
Yeah, thanks for having me, Joji. I'm Srijita. I'm a brief introduction. So I'm a Harvard Business School class of 2011 graduate. A lot of my classmates are recently in the news for all the right reasons. And after that, I've spent most of my career at a mix of FANG startups. So I held product management and business development roles at Google and Amazon, and then worked at a bunch of different startups across India, across different stages. And Reina is my second entrepreneurial venture. I moved to Southeast Asia in 2019 because I thought the ecosystem was very vibrant and I saw a lot of similarities between the patterns that I'd seen playing out in India. And we basically, first we started out as an influencer brands development platform. And 2020, we pivoted. So it's a 1.5-year-old company for all practical purposes. We've seen extremely fast growth. We've grown 50x from December 2019 to December 2020. And really excited to talk about what about the Southeast Asia ecosystem and Indonesia specifically excites us at Reina. So back to you, Joji. Yeah.
Thank you. JJ, go ahead.
Thank you so much, Joji. Good afternoon, everybody. Thanks for taking the time for the panel. So I'm JJ. I'm the CFO at Gudang Ada. So my background so far, leading up to this point, is a three-parter. So I started off 10 years in investment banking in New York, Hong Kong. Got a little bit itchy, wanted to be an entrepreneur. I started a merchant bank in Singapore, focused on helping management teams fundraise. Did that for about 4 or 5 years. And then subsequently became the CFO at Sendo. So this is one of the largest e-commerce players out of Vietnam before I joined Gudang Ada earlier this year. And for us at Gudang Ada, we are a B2B marketplace leader in Indonesia. So our highly unique and differentiated go-to-market approach, as well as our scalable asset-light business model has seen the company scale up at an unprecedented pace since inception only about 2 years ago. We are now actively transacting hundreds of millions of US dollars on our platform on a monthly basis. And the vision for Gudang Ada is to build the #1 and most capital efficient B2B ecosystem in Indonesia and beyond. Back to you, Joji.
Yeah, thank you. Anderson.
Thanks, Joji, for your time here, and good afternoon, everybody. I'm Anderson, co-founder and CEO of Ajib. We are the largest online stockbroker in Indonesia. And our vision is to welcome a new generation of investors to modern financial services. So I'm really excited to be here and to chat a bit more about the country.
Yeah, thanks, Anderson. I just want to start with, our topic is about move fast and make things. And related to that, let me start with you, Sri. You recently raised about a 9 million Series A round. But I want to sort of look at before that, the story about your pivot in 2020, because pivot to social e-commerce, and that happened during the pandemic. So therefore, to move fast, how critical is it for startups to sort of adapt their offerings rapidly to meet the evolving demands of the altered marketplace?
Yeah. That's a great question. And, just some context here, right? So the short answer is absolutely critical. It's the difference between life and death as a startup. Now, just some context here, right? Like, as I mentioned, Reina is my second entrepreneurial venture. And the first one was a fashion rental startup in India. And, we had the privilege of having great investors on board. We had a great team. But essentially, I think product market fit is something we never found. And that's when I really learned this truth that you can have great investors, a great team, great PR, everything going for the company. But essentially, if you don't have product market fit, or you've not really cracked very precisely what is that problem that you're solving for the customer, your existence as a startup is very vulnerable and shaky, right? So I think just very tactically, right? Like there are 3 things that we at Reina, right? Like we launched in 2019 and then, we pivoted and we tried a bunch of different ideas. And every time we would test out a different idea, we would basically, when we said we found product market fit, there were 3 things that stood out, right? We were very able to clearly articulate what was the problem we were solving, right? So essentially, just some background on what Reina does, we essentially allow any independent retailer, whether that's a dropshipper, whether that's an agent, whether that's an online seller, who's passionate about beauty and wants to sell beauty products, a convenient and reliable way to source products, right? And that was the problem that we were solving. That was the market we were going after. And the problem we were solving is that these independent retailers don't have the supply chain capabilities or the muscle that large organized retailers have the advantage of, right? So we were very specific about this is the problem we were solving. The second step was, you really have to have these North Star metrics and really track whether you're making progress on those metrics. So for us, it was customer pull and customer love, right? So our North Star metric was how many people were we acquiring organically. So even today, 60% of Rena's downloads come organically, right? And the second thing was, what was our net revenue retention, right? And I can confidently say that it's one of the best in class metrics in the industry, right? So we constantly track those metrics. And when we would, and in previous iterations, right? Like when we saw those metrics not adding up, we were very quick to adapt and basically like move towards something where we saw those metrics moving up and to the right. And finally, like I can't emphasize this enough. I think another thing that, we've really built into the DNA of the company that helps us move fast and adapt is just being very welcoming to contrarian opinions, right? So as an entrepreneur, you're building the future. It's very easy to feel misunderstood. It's very easy to feel that people don't get what you're doing. But I think one practice that we've built into Rena is saying that, hey, if someone's saying something, whether that's a partner, whether that's a customer, whether that's a potential investor, why are they saying it? And can I stress test it? Can I run an experiment around it and validate or invalidate it? So, these are some of the three things: specificity of problem you're solving, having the right North Star metrics, actively seeking out, and active listening, that at least have helped us move really fast and have helped us sort of like accelerate this journey of finding product market fit.
Got it. See, just a quick related question. The problem that you're solving, there is some report that is a $20 billion market opportunity. That's massive, but we don't sort of hear much discussion on this sector or this market opportunity.
Yeah. So let me actually break that down, right? So the beauty market in Southeast Asia across all countries is a $22.5 billion market, largely dominated by Thailand, Philippines, and Indonesia. Indonesia is the highest at about 28% of that $22.5 billion. Right. And now let's kind of go like a level deeper and really think about what is the customer problem, what is the channel, and what is the sort of like partner brand stakeholder problem, right? So the customer problem is that, like millennials, middle class is driving most of this consumption. And it's not like the world earlier. It's not like when I was growing up, right? Like where my mother's use of beauty products would influence, like what I was using. Millennials today, and even me today, I'm not a millennial, but even me today, basically I discover products through Instagram. I discover products through marketplaces, right? And a lot of times the supply chain hasn't kept up with what I'm seeing on Instagram. And that's the fundamental customer problem we are solving, the end customer problem we're solving. Now, if you look at where is this customer, why is this problem not solved? If you look at the end customer is buying either at organized retail or independent retail. And independent retail could be online and offline. Now, organized retail is somewhat capped, right? Like you can't possibly have all the world's selection, all the world's brands under one platform, right? Independent retail essentially, like doesn't have the supply chain muscle, right, that an organized retailer has. So that's where the bulk of the commerce is happening. That's where the bulk of the GMV is flowing through. So that's really the problem where we said, hey, like there is this independent retailer. We know that 25% of this beauty market is large brands. The rest of the customer demand is small niche brands, right? And if we really have to empower, if we really have to connect these two sort of like underdogs, right? Like which is these independent retailers as well as these indie brands that don't have the distribution muscle, that's really sort of like the problem space that we see as very interesting and very large and very fragmented. Now, why don't you hear about this, right? I think a few assumptions, right? Like a few assumptions could be that, hey, like organized retail drives a large portion of this GMV, which is not true. Or a few assumptions could be that, hey, like the large brands drive most of the GMV, which is not true. So I think it's just a matter of time. It's just a matter of market education before people sort of open their eyes to this massive opportunity that we're sitting on top of.
Got it. Anderson, let me come to you. Srijita mentioned about millennials and the consumption opportunity that this area has, and that's something that you and Ajib have been riding on. But before that, you raised 65 million Series A recently. That takes the total amount that the company has raised about 90 million. And what is most interesting was the round was led by Ribbit Capital, the fintech investor that recently also read the Robinhood's $3.4 billion funding. And you were also Ribbit Capital's first investment in Southeast Asia. So what did Ribbit see in you, Ajib, and in Indonesia?
Well, hopefully they believe in the founders, and that's why they made the bet. But I think that we're founders that really care about product, and we really care about building a long-lasting, trusted brand, especially because we stand in financial services, and we want to be here as the main relationship holder with customers when they think about their personal finances in the future. And so, we're founders that really care a lot about what consumers think about our product and how their product experiences are. And I think that, that's probably one of the reasons why they're pretty keen on looking into us. But let me make also a comment about Indonesia as a whole, right? I think that the opportunity that we're targeting capital markets is really huge. Indonesia is one of the largest capital markets in the world. We have over $500 billion in market cap, yet we only have 1% of the population invested in stocks. We're the country, there's no other capital markets the size of which that Indonesia is today, with only 1% stock investor penetration. What that says is two things. First of all, is that, wow, the opportunity there is so huge, it's still underpenetrated. But the second thing it also says is, imagine what if we can bring the Indonesian stock investor penetration up to 3%, up to 5%? How much more massive can our capital markets get? I think those two things in combination of our focus onto product and the customers and brand as to the opportunity in the market is what makes us really excited about this.
Got it. It was very interesting to sort of hear about the opportunity that Indonesia offers, especially because just 1% of the population currently owns stocks. But sort of looking at it big picture, to tap into that opportunity, what do you think needs to be done? What I meant is in terms of democratizing access to a range of investment products, not just stock market investing, but a whole range of investment products. Do you think it'll happen via the mobile wallet ecosystem? How do you see it?
So I actually think that capital markets is the ultimate tool to democratize finance for all. If you think about it, people participating in capital markets basically participating in the gains of all the corporations that's also benefiting from this rise of consumption in Indonesia, from this rise of the middle income segment. So it basically democratized the gains of those corporations to anybody in the retail segment that wants to take a piece of, these iconic companies like BCA or Mandiri or things of, of companies that have reached such massive scale in the country because of just the sheer size of our population. I think that to me, it's not really about, I think it's really important to improve the onboarding or the ease of onboarding to capital markets through these e-wallet payments or mobile platforms. But I think to me, what's more important is empowering our customers, is empowering them to take advantage of this tool, which is capital markets, right? So to us, it's about giving them enough information so that they feel comfortable to participate as a first-time investor in our stock market, to give them enough knowledge and enough comfort, and reducing all those barriers to entry, which includes the ease of opening up an account, which includes the minimum amount to open up an account, the fees and everything under that. But I think what's key for us is to empower our customers so that they feel comfortable to participate in this massive tool, which is our capital markets.
Got it. JJ, let me come to you. You connect wholesalers and retailers through your B2B marketplace platform. And you started the year with about 300,000 users, and you're sort of looking to onboard end the year with over 750,000 or even up to 1 million users by December. The company is also on record saying that you are looking to raise about 75 million Series B. So when we talk about moving fast and making things happen, do you think sort of capital raise is also very critical for firms like you?
Yeah, so as mentioned, we are in the midst of securing the Series B funding of up to US $75 million, and we did our 25 million led by Alpha and Sequoia last year. To your question, I think capital raised, for us, at least from Gudang Ada's lens, will be used to expand the business. Firstly, through the strength of our B2B marketplace, as we're kind of like leaving out different branches there. And then with the layering of ancillary and integrated kind of like service offerings, which includes logistics, merchant solutions, as well as financial services for Gudang Ada. Now, specifically, I think the expansion capital, it's a key part of the equation, no doubt. But, because at Gudang Ada, we already run a very highly efficient, capital efficient business. and we look to continue to do so post our fundraise. I think we believe that the swift, dynamic, and efficient execution is actually what is most key to making things happen in this B2B marketplace ecosystem. So I mean, from that standpoint, what I mean is, this is ultimately a very traditional and fragmented supply chain that has been operating a certain manner for a very long time. Throwing capital in this business, it's not the solution to win in the industry long term. So what we want to do is to actually empower and de-bottleneck this industry because we're well versed in the pain points and believe that we're well positioned to deliver the solutions that's needed for the merchants along the supply chain. So for us, we're in the long haul. We're in this for the long haul. So in terms of approach, we grow our business that way as well. So capital is key, but I think execution is just as key, if not more important.
Got it. Can you also take us through how big the opportunity is? Because Indonesia has about 6 million warungs, and they account for up to 70% of the country's retail sales. And there's several startups sort of targeting the space. And how do you see this play out over the next 12, 24 months?
Yeah, great question. So yes, so this is indeed a huge opportunity due to several underlying factors that we see. So first and foremost, we're talking about $100 billion plus for the FMCG and staples market for Indonesia, another 100 billion or so for other product categories outside of FMCG and staples. 6 million unorganized retailers and warungs in Indonesia today, many of them in rural areas. They are the first go-to port of call for the purchase of items daily and weekly for millions of Indonesians. 85% of the supply chain is covered by general trade and traditional trade, and only about 10 to 15%, covered by modern trade, where the manufacturers and their principals directly cover the retailers or the warungs. So, as a result of that, a lot of pain points that exist along the supply chain, overall inefficient market, lack of product variety selection, lack of price transparency, inefficient logistics, no access or difficulty in accessing like working capital. In the next 12 to 24 months, we expect that we will continue to see different solution providers approaching the issue from different angles, coming into the market, be it through order management, bookkeeping, payments, or even financial services. That ultimately will be a big boost to the overall kind of like breeding of the B2B ecosystem. For Gudang Ada, the way we think about it, we are at the forefront of this transformational shift. We own the most key ingredient and driver needed for the successful scale up of this standalone solution, which is basically the underlying marketplace of the e-commerce transactions. So putting my business model hat on, I've given our penchant for an asset-light partnership model. So at Gudang Ada, we expect to see very attractive partnership and collaboration opportunities with the right partners across different areas that I talked about in the next 1-2 years and beyond.
Thank you, JJ. We've heard the founder. So Jeffrey, let me come to you and sort of look at the whole thing from an investor perspective. According to Deal Street Asia data, there are about 66 VC funds currently in the market to raise over 6 billion just for Southeast Asia opportunities. Specifically to Alpha JWC, you are also raising your next fund. We've reported that the target is 250 million US. And with this new vehicle, what changes for you, and how do you sort of move fast and make things happen?
Yeah. So first of all, Joji, we believe that this time is actually a good time for us to raise money, to deploy capital. It's really one of the most exciting times for us, right? So for us, Alpha JWC, we've been around for about 7-8 years. We're operating 2 funds now. For my partner Chandra, he has been investing since 2010, so it's already longer. And what we are seeing now is that the inflection point. So there's a lot of movement in the market. So in terms of the fundraising, things are actually doing very well. In fact, that because of the travel restriction in COVID, the fundraising round will also get quicker, right? We'll get quicker yes, we'll get quicker no, but nevertheless it's quicker, so it's good. Same like founders as well. When I talk to founders, usually one of the best thing that I can do to founders is that stop wasting their time and giving quick feedback. So the whole process of fundraising, I believe this is also true in when we look into the companies, is that the whole process is getting faster. But there's a couple of things that I think it's worth highlighting to the audience here, is that we are actually seeing a different dynamic in the fundraising landscape now. First of all, in terms of how the investors look at the region, which is way more positive. In terms of the type of investors who are looking into the region, which is more diverse, and more importantly, higher quality. Usually the one that's previously in the past few years or prior to COVID is not really looking into the region because maybe the region is too early for them. They actually have started to look at it more closely, right? And we believe that it's either this year or at most next 1 to 2 years, they will actually invest in the region. So expect more participants in the market as well. And if I can highlight the 3 things that really contributed to this exciting development, is that there are 3 things. One, that like you mentioned, Joji, I mean, now it's really exciting for us. We know that, of course, the first company that went public and then really put us on the map there is like C Group. But we also look at GrabSpec. We have Goto, Traveloka is coming as well. And even, I don't know where you find the news from, and I have no comment on that, Joji, but on the Credibo spec, right? I'm in the board of Credibo, but I will have no comment on that, right? So you know that there's a lot of movement in the market, and that is actually will create one, liquidity in the market, and also number 2, it will attract a lot more investors to look into the region. Number 2, if we look at how quickly the companies are growing, especially during this pandemic, because pandemic push and accelerate a lot of digitization. If you can talk to both Anderson, JJ, and Srijita, right? For some of the sectors that are benefiting from COVID, not only they will have a faster growth, but they will also have a faster path to profitability, meaning that the monetization is actually getting stronger. And that is very important because investors are attracted to growth, yes, but at some point, investors want to see profitability and sustainability. And we are actually seeing that now, right? And then last but not least is that we believe that those different investors will create liquidity, but also because of some of the movement in the market, we will also see the next generation of founders that's coming to the market. So net is really exciting times here for us, and really excited to see what's going to happen in the next 1 year or so.
Jeffrey, just a quick related question. From your, when compared to your earlier funds, what's the difference you're seeing, especially because with related to investor interest? And when I say investors, I'm talking largely about institutional investors, especially pensions from some of the large pensions from US and Europe that have typically stayed away from this region.
Yes.
And as you are fundraising, as you talk to more of these LPs, how has their interest changed when it comes to Southeast Asia?
So I will say that the most important thing for those kind of investors who have the option to invest globally is the liquidity and the option, the exits, right? So I think what changes is that the fact that C Group is the second best performing stock market last year in Nasdaq, right? They say, hey, I can make money by investing in Southeast Asia. Number 2, in fact, from us in Alpha JWC, we have a couple of exits, right? Both through secondaries and also through M&A. So in our short 6-7 years period of we in the market, we have generated a couple of exits, and that's really important. And if there's not enough exits, we can actually share to these investors saying that, hey, yeah, we do not have exits yet, but you need to believe that we have a big potential. And one key data point to actually support that is that the fundamental of the business, the fundamental meaning that the revenue, the unit economics, the profitability. I mean, if you look at our portfolio companies, we have quite a lot of them are actually profitable, Joji. So that is something that actually really make a lot of these investors taking a really big step to start investing in the region.
Got it. Dr. Khatib, thank you for waiting. You held several important positions, including Minister of Finance in Indonesia. You were also the chairman for the Indonesian Investment Coordinating Board. You heard from Jeffrey, you heard from the founders. Where do you see Indonesia overall? Do you still think that it still has a very young startup ecosystem that has a lot to prove? And in terms of unicorns, there are about 5 or 6 now, but do you see an opportunity and space for a lot more unicorns to emerge from Indonesia? So, like, do you look at it? Are we still in season 1 as far as Indonesia is concerned? I think you're on mute.
Sorry.
Yeah.
Can you hear me now?
Yes.
Yeah. Joji, let me share my view from the macro perspective first. Yeah. If we are talking about the global economic growth, couple of years from now, Asia will play a major role as a powerhouse. And if you're talking about the pole of growth in Asia, there will be a 3 central pole of growth, which is South Asia, like India, East Asia, like China, Japan, and Korea, and Southeast Asia. And when you are talking about Southeast Asia, 50% of the total of Southeast Asian population is basically Indonesia. And if you're talking about 50% of the ASEAN GDP is basically Indonesia. So I would say, even though sounds not politically correct, ASEAN is a greater Indonesia. So this is exactly what Anderson said, the market opportunities is there. You are talking about specifically, you are talking maybe about 170, 180 million people unbanked population will provide the potential for, if you would like to do like a fintech, you are talking about huge market. Anderson also mentioned about millennials. The average working age in Indonesia is about 26 years old. Yeah, and they are using gadget. The only problem is related to the infrastructure, internet. But the way I look at the situation is the market opportunities, the market is so huge and not so much tech penetration on that. So when you're talking, we're still in the very, young startup, which is true, but this is the opportunity because not so much the ecosystem is there. Then this will give a lot of opportunities for you to start to do your business here in Indonesia, and that's explained why Indonesia is a very appealing, is a very interesting place to invest in the tech. So the way I look at it is like two sides of coins. Yeah, we need to still too much many things to prove, but this is an opportunity. If you are able to cater this market, then you are doing very well.
Got it. Does that mean that this is the best time to invest in Indonesia because you explained about the potential for Indonesia?
I think so, especially because the pandemic. One thing that we learned from this pandemic, uh, companies or sectors that survive are the sectors or the companies who are able to transform themselves into the digital. And investing in digital is not something very cheap. That is why they need to collaborate with the so-called the native on the digital sectors. I call the situation is accidental transformation because the digital is there, but the pandemic accelerate the digital transformation. So I think I completely agree with you. This is really the best time to invest on tech.
Before moving to the pandemic, just one more related question for you. Where does this place legacy banks? Do you think that all of these, because fintech will be a big play going forward, so do you see many of these legacy banks moving to partnership with tech companies, therefore like turning threats into opportunities? Because fintechs are sort of rebundling the whole banking services in Indonesia.
I will see in a different way because if we try to cater like the ultra micro for the credit, the transaction cost is very high because you need to establish brands, etc., in the rural area in the village. But if you can do a sort of like a peer-to-peer lending or fintech, you can cut the transaction costs. But unfortunately, let me be honest and frank with you, I'm a chairman of the one of the largest bank in Indonesia. We don't have the DNA for that. Yeah, because the banking sector is a very different, it's a heavily regulated industry. If you're talking about fintech, how do you define this? As a fin or as a tech company? The good thing about techs is they are very agile. They are able to adjust themselves, you know. So somehow, the way I look at this, I believe that the banking sector should collaborate with the tech, you know, supporting the fintech, etc. And I don't see this is a sort of like a threat to the conventional business like banking sector. If we don't want to adjust, of course, you know, we'll be a sort of like a kick out from the market. But I do believe that the banking sector need to do some adjustment. And since we don't have the DNA, we don't have the analytic, we can use the opportunity, you know, the ability of the fintech to create the credit score. That's really the, you know, that's really the capital on it. Yeah, so I think so I can see the opportunities to collaboration between banking sector and also the fintech.
Yeah, thank you. So I just want to spend some time for the next maybe 15, 20 minutes sort of discussing the pandemic and how Indonesian startups rewrote the recovery script through the pandemic. Just want to sort of highlight some numbers. In terms for Indonesia, the digital transformation that COVID brought about has been really huge for the country. Its internet population hit 74%, the penetration, sorry, hit 74% in 2020. That's equivalent to about 196.7 million users. This means the country added about 25 million new users last year. And it's not just the addition of new users. A bulk of them had to go online for most of their daily activities. It's provided a huge boost for Indonesia's startup ecosystem. Earlier, internet consumption and smartphone had always been growing, but online transactions had not kept pace. But 2020 saw, like, we entered a new era where consumers were actually tracking ahead of firms in digital adoption, where they were ready to pay, ready to transact, and especially in provinces and cities outside Jakarta. I'll start again with the founders. Srijita, I will start with you first. Your pivot to social e-commerce, like we discussed earlier, coincided with COVID, and you also talked about how your revenues grew 50 times last year between January and December. Uh, what do you attribute it to? Do you think it's because of an increase in online shopping during lockdowns, or was it because people are looking to earn additional income during these times, or the fact that a lot more people spend more time online because, especially on social media platforms?
Yeah, yeah. So I think there's one statistic that Dr. Khatib mentioned, which is that the average working population of Indonesia is probably around 26 years old, right? Now, when you place that in context, I think what the pandemic showed people, very unfortunately, right, is how vulnerable jobs are, right? Like in an ecosystem, in sort of like the wider ecosystem. What did that lead to, right? Like there was much more of a necessity to take your destiny into your own hands and say that, look, I need to diversify my income streams. I need to basically find other ways, find other entrepreneurial ways to make money. And because the person who's trying to make money, because this person, this seller in Reina's context, is 26 years old, is probably already very familiar with social media, is very familiar with like online C2C platforms, the easiest transition for them is to basically start creating content and then start monetizing that content through commerce, right? So all of the trends that you mentioned, right? Higher digital adoption, higher consumption of digital media, higher consumption, higher willingness to pay online, right? All of those things basically attributed to our growth. The other thing that we can attribute to Reina's growth is essentially beauty. If you look at it as a category, was before this sold offline, right? People assumed that they would need to basically like touch and feel products before buying them. Now, when retail shuts down, right? Like when offline stores shut down, what do? Do you stop using the products you've always used? No, this is where the creative sort of millennial workforce comes into play. And they say that, hey, like I sense this demand that people are going to want to buy these products. So I'm going to really create creative videos on TikTok that help tell why this product is special. I'm going to create creative videos on Instagram that basically communicate, why this product is special. So TikTok and Instagram become sort of like the virtual malls, right? Like because physical malls are shut down. And then this is supplemented by essentially a transaction loop that Shopee, Tokopedia, all of these platforms is enabling. And Reina is basically the supply chain ecosystem that is powering this whole content plus commerce wave that's taking place in Indonesia. So very simply, first principles, that's really how we grew, right? Content was there, content was being created, commerce was already taking off. All we did is we gave these sellers who were really entrepreneurial and motivated a place where they could basically access the best supply chain, the widest variety of products at the best prices and very conveniently.
Got it. Anderson, let me come to you. So Ajib went from rank 27 last year to the fourth most active brokerage in Indonesia with about just under 4 million transactions in March 2021. This is according to IDX data. How much of this was due to the pandemic, or were there other factors at play here?
Actually, I believe we started last year at rank number 98 and then at rank number 4. I think that part of this is because of the pandemic, but another part of it is accelerated by the pandemic. For example, I think, first of all, there has been an ongoing trend of people opening up accounts online when it comes to stockbrokers, as opposed to going to the branch or through a salesperson. And it's been going on for a couple of years now. But because of the pandemic, this whole shift from offline to online is incredibly accelerated. You have lockdowns, which doesn't allow customers to go to the branch. And you also have social distancing that doesn't allow customers to be able to interact with salespeople. And so a lot of that is accelerated because of the pandemic. Another example is, there's always been this thought process in the customer's mind that they need to think about financial planning, especially because their user base is very young, right, in the millennial segment. But I think that due to the pandemic, unfortunately, some of our friends might have been affected financially, and they're starting to realize the importance of thinking ahead, thinking about how to invest for the long term, and thinking about how to shift their finances from a consumption behavior to more of a savings and investment behavior. And so I think that these trends that's been ongoing, that's accelerated by the pandemic, is here to stay. And I think that this accelerated adoption of those behaviors will continue even after the pandemic. I mean, there are certain things as well that is caused specifically because of the pandemic. For example, folks are now working from home or staying at home much longer, and some of them might have been affected in their finances. And so, one of the very few ways to actually make money from home is perhaps if you participate in the capital markets, especially if we make it available through their mobile phones, right? So, Joji, there are certain things that are accelerated by the pandemic that will continue to accelerate beyond this. And there are some that's temporarily affected because of the pandemic itself.
I also want to ask you, what are the deeper implications? Because 70% of the new investors in the stock market, you talked about them being millennials. And with a lot more, you talked about the potential that the Indonesian stock market holds. So does this mean that it makes it attractive for a lot of the Indonesian unicorns, be it GoTo or Traveloka or Ticket, like all of them, to sort of list or do a dual listing on the Indonesian exchange? Because as the sort of stock market deepens, does it make it very attractive for them?
Absolutely, Joji. I mean, I'm a huge proponent of this. I think that on the one hand, there is a capitalist argument for this. And the other hand, there's also kind of a social responsibility aspect to this. I think on the capitalist side, the reason why 70% of all the new retail investors are millennials is not because of the age, but it's actually because of the earnings potential. Majority of the rising middle income in Indonesia are millennials. And as people's wealth increase, they start thinking about investing this and trying to make their money work more for them, right? And this is probably a segment that you want to attract because for majority of the unicorns, this is your customer segment. These are the people who are going to be buying stuff from you, whether it's ride hailing or through e-commerce or whatever, flight tickets and things like that. So you want to build this brand affiliation between you and the consumers. And I think that doing that through capital markets is an incredible way to do it. If you think about the consumers in the US, there's a reason why Apple, Tesla, and Google are some of the most popular stocks there. Is because these are people who actually use the products and have this strong brand affiliation and a loyalty there. And then when I go to more of the social responsibility argument for it, again, I say that capital markets is an ultimate form of democratization of finance. So if you are a unicorn in Indonesia, you have benefited from the population that we have and the consumptive behavior and kind of the macroeconomic trend that's really causing this rise in the economy of Indonesia. So I think from a social responsibility perspective, you gotta allow us retail investors in Indonesia to also participate in your success. And so, I'm the hugest proponent for these unicorns to also IPO in Indonesia too.
So what are you picking up from the IDX on some of the upcoming IPOs?
Yeah, I think the IDX is also pretty keen on this happening. I think that besides it allowing an opportunity for investors in general to participate, but it also will create excitement from the millennial retail investors to finally participate into our capital markets, so that 1% stock investor penetration can go up to 5% very soon. So I think that everybody in the ecosystem is really pushing for this.
Got it. JJ, let me come to you. Am I right in assuming that in 2020, most of your transactions went online rather than sort of face-to-face contact with wholesalers? And in terms of percentage terms, any numbers that you can add in terms of the digital adoption, how much it has picked up?
Yeah, no, thanks for that, Joji. Yeah, so on the one hand, like what the rest of the panelists are saying, like we obviously seen that the pandemic has accelerated traditional merchants to open up to switching their business from offline to online. As the incumbent offline distribution model becomes increasingly inefficient and expensive. On the other hand, at least in our industry, that we play in, like, completing transactions online, in a very traditional and fragmented industry does not happen easily. It requires the right merchant education over a period of time, along with the right layering of the right service offerings into the ecosystem to lock in the stickiness over time. Now, having said that, I think the acceleration in the need for technology adoption for merchants is undeniable, and ultimately benefits companies like Gudang Ada tremendously. And just to share a couple of numbers, in the year 2020 itself, for us, on a net merchandise value perspective, we've increased close to 10 times year on year. In terms of registered users, the number has been more than 10 times as well. And in terms of annual orders, that number has increased about 14 to 15 times year on year versus 2019. So, in terms of, that is probably what I can share in terms of what we've seen roughly in the ballpark for an increase in terms of digital adoption in this space.
Got it. Yeah, it's in line with the growth that the other founders on the panel have been talking about. Jeffrey, let me just come to you and ask you from the investors' perspective. According to Deal Street Asia data, in terms of the total amount raised by startups in Southeast Asia, last year was about $8.6 billion. Just a small 2% dip compared to about 8.76 billion in 2019. So there has not really been any slowdown by investors and VC firms. Do you think that for the investor community, they sort of use this time to double down on sectors such as fintech, vertical e-commerce, health tech, ed tech, and some of these sectors may not have seen a lot of investments earlier, but were they the beneficiaries due to faster adoption of the digital lifestyle?
Yeah, yes. So first of all, I would like to comment one point about the 2% dip. So that's the first level of the data, right? But if we dig deeper into the data, there's actually a bigger dip in the earlier stage, but there's a bigger increase in the later stage. For example, some of the fundraising for companies that we have, when they are successfully raising the funding round tends to be bigger, and funding round tends to be way more oversubscribed compared to the pre-COVID level, right? And the reason why is because in the COVID era, there's less number of earlier stage founders but we see increase in quality of the founders who are actually dare enough to start the company during these difficult pandemic times. So we on earlier stage we experienced and we saw that there's a decrease in the quantity, but there's an increase in quality. On the later stage, Series A and above, for those companies who are actually having good traction, managed to grow and benefit from the pandemic, there's greater investors' interest because the liquidity is still there, and those liquidities, those VCs are looking for good companies to invest. And in terms of the sector, I wouldn't say any specific sectors, right? So the way I believe a lot of investors are looking at it is that, one, is the company benefiting from this COVID? If yes, then definitely they will get a lot of interest. But even for those companies who are actually not doing too well in the pandemic, we see that a lot of portfolio companies are also getting funding, and of course the narrative is a bit different, right? The narrative for those companies, let's say in the travel industry, how investors look at that is that, one, how are you holding on in this pandemic, right? What do you do? And some of the great founders, and by the way, we have amazing founders that has managed to navigate through these difficult times greatly. So a great scenario, great narrative looks like they managed to cut a lot of the expenses. They managed to improve the unit economics. The revenue is down significantly, but it's actually not a bad place to invest, because if we believe that there will be a comeback in this industry, they will be a better company, a stronger company with less competition, right? So I will say that yes, in there's certain sectors that have a clear growth, and that's easy. But I believe that there's a lot more opportunities even in some other industries that do not benefit from the tailwind from the COVID.
Interesting. Let me just come to Dr. Khatib. What I wanted to ask you is, how do you see the sort of the post-pandemic phase? How do we sustain the momentum? We've sort of heard everybody talked about the growth that they've seen. And what do you think will be the role of the government going forward to sort of facilitate or ensure that they facilitate this growth?
Sorry, can you hear me now? Okay. First, I think we will see a sort of like a hybrid model. Of course, we can see the increasing role of the tech company, the digital company during the pandemic, but one cannot expect that this will replace everything, because user experience cannot be substituted with the digital. You cannot replace, substitute staying in a hotel with the digital, or going to Kuta Beach in Bali with the digital. But some activities, during the pandemic, that's been sort of like done through the digital, will stay. So let me give an example. Yeah, on the banking sector, not so many people come to the branch anymore, and even to the ATM. Yeah, if you look at the frequency or the data about using the banking online, is increasing quite significantly. So somehow we need to do some adjustment. The future model will be the hybrid bidani. So that is why, as I mentioned to you earlier, I think the future model will be companies will start to collaborate with the digital company, because it's still too expensive for them to invest themselves on the digital technology. And one thing that the government needs to provide, you are talking about this, I mentioned about the potential market in Indonesia, but the biggest problem is, let me be honest with you, is infrastructure. Because when you are talking about this, market, you are talking about only the big cities in which the 4G available. Yeah, but if you are talking about eastern part of Indonesia, in Kalimantan, etc., then we have a problem. So the role of the government is to provide the infrastructure for the digital technology. The good news is, if you look at the budget 2022, the government start to put the priority on the infrastructure digital.
Interesting. You spoke about infrastructure. So related to that, how big a game changer will 5G be? Because 5G deployment growth, that will be led by government policy, government initiatives, especially for the faster internet or for the startup ecosystem in the country. How do you see 5G?
Well, this is definitely a game changer. But as I said to you, if I'm not mistaken, the launch of the 5G will be limited to 13 major cities. It's Jakarta, Bandung, Yogyakarta, Semarang. So most of the cities in Jawa, uh, and then some of the areas related to a tourist destination like Labuan Bajo, etc. It's big enough to cover some of the market, but it's not least the whole the whole potential, because we are talking about 180 million people population unbanked, right? So like it or not, this will help, but definitely, smartphone is still too expensive for many people here. Yeah, you will only get these economies of scale once the smartphone become very cheap and available for most of the Indonesian. So that is why this 5G somehow will help, but need to be supported by infrastructure from the government and the competition from the smartphone themselves. So everyone in Indonesia can have an access for this.
Got it. In terms of sustaining the momentum that we're seeing, JJ, I just want to ask you, like, for you, does this mean that logistics will become an essential part of the local supply chain, the services that you offer? Meaning, going forward, will it become absolutely standard that anybody who shops on, using your platform can also use the logistics that you provide?
Yes, Joji. So we started off our pilot logistics program last year in an effort to inject increased stickiness into the ecosystem and to support the marketplace transactions. And it will continue to evolve into being a standard option for buyers and sellers on the platform. Now, to be clear, just like with our marketplace, we are asset light in our logistics strategy. So we pursue a 3PL partnership model rather than building and owning the fleet ourselves. Now, although we are still, I would say, in infancy, early stages of our logistics strategy, there has been promising kind of operational milestones to date. In less than a year, we have actually successfully generated an average of approximately 55% increase in deliveries month to month since our launch in of last year, 2020. And more importantly, actually, our scalable distribution and marketplace model is a big reason why we now have presence across 500 cities, across Indonesia. Now we're hence able to continuously expand our coverage area to weave in logistics services in a very asset-like fashion, so very scalable, as well as to achieve the optimal, what we call like the colony or the effects. So what this does ultimately is actually create a flywheel ecosystem that drives and improves the stickiness, as well as improve monetization down the road for the Gudang Ada platform. So yes, in short, logistics is a very key component kind of offering that we envision on our platform.
Got it. Anderson, what does sustaining momentum mean to you? And sort of if you can continue at this pace of growth, do you think it's possible that we can see platforms similar to China's Futu, which has sort of onboarded millions of new investors into the market, or India, like we have Zerodha in India that has sort of helped make sort of converted a lot of millennials to start trading on a regular basis. So do you think we will see such platforms emerge from Indonesia in the next 1 or 2 years?
Yeah, absolutely. And hopefully we are building that in Indonesia right now. To me, when I think about sustaining momentum, right, I think it's also really important to realize that the flip side of only 1% of the population invested in stocks is that 99% have never invested in stocks before. And so I think maintaining the right education and initiatives to increase financial literacy is incredibly important, because, especially for first-time investors, when they come into the stock market, this is a cyclical business. There's ups and downs, right? You want them to understand what they're invested in so that they stick around during the downs and they also benefit through the gains of the ups. So to me, when I think about sustainable momentum, like truly sustainable momentum, is you got to pair up customer acquisition along with the proper education, along with the proper presentation of our products, so that customers do actually learn and are feeling empowered by the information, and not just coming in here for a very short time. And so one of the key metrics that we track here in Ajib is actually the retention of our customers, because I think that's representative of through the ups and downs of the stock market, how well we've educated our customers.
Interesting. Srijita, how do you what will you be doing to sort of sustain this momentum? Will we see the company expanding into other segments, or will you just focus on skincare? Do you think one option is to look at white labels of skincare products, from, let's say, Korean beauty companies? And there have also been reports that the pandemic has sort of changed the way, and you refer to how customers refer to and buy beauty products. So therefore, have we sort of reached a stage where a lot of people actually view skincare to be more important than makeup or self-care, I mean?
Yeah, 100%, right? So absolutely, skincare, we are seeing trends that, because see, essentially, when you look at beauty, right, like it's largely about being a better version of yourself. And earlier, right, like when you were constantly going out, etc., like makeup was basically a way to feel better about yourself. And now when you're at home, you basically want a more long-term investment in yourself. You want a more long-term investment in things that basically give you that mental health boost, right? And those are the reasons why, like not just in Indonesia, but worldwide, we've seen an increase in sales of skincare, increase in sales of wellness products, increase in sales of sort of like self-care products, right? So absolutely, I think we're entering a phase where skincare, wellness, self-care is increasingly becoming more important than makeup as a category. And that's what we see on Reina as well. 80% of our sales is skincare, about 15% is mother and baby, and 5% is only makeup, right? Like that's really how it sort of breaks up. Now, in terms of next steps. So first things first, I think beauty alone is a large enough category. As we discussed earlier, it's a $22.5 billion market in Southeast Asia. Would we consider entering other categories? Depends entirely on our assessment of the fundamental problem we are solving for those categories, right? And two problems that we could solve. Is it a category that millennial sellers want to sell? Is it a category that independent sellers can make money selling, right? Very similar to how Anderson described how he thinks about stocks, right? Like, is it something that millennial sellers relate to? Is it something they really use and therefore are likely to endorse and therefore sell, right? So that's one axis, because that can help, that category can then help unlock sales. From the brand perspective, from the supplier perspective, is there like a fragmented supply chain? Is there a long tail of brands or a long tail of suppliers that we could essentially aggregate? And if we can do these two things, right? Like if we believe that there are categories where we can essentially aggregate a long tail supply chain and make that available to these pools of sellers that are really interested in these categories, I think the answer is absolutely yes. Down the line, we would enter new categories. Now, in terms of white label, right? White label for us is basically a great way to tap into niche product, niche customer demand, right? So just to give you an example, we would never cannibalize our brand partners' sales. We would never launch products that would compete with them. What have we done in the past, right? So one of the things we realized last year, constant customer feedback, constant polling of our seller base, showed that people wanted a sunscreen that was easy to apply, that left no white cast, and people were looking for options that basically could like withstand blue light. And that was a niche we saw none of our brand partners addressing. So we partnered with manufacturers in Korea, and we basically launched our own version of a sunscreen. We managed to sort of like get it through regulations, everything, and that product, that one SKU is now like 5% of our total monthly volume sold, right? So that's very powerful. That's really sort of our private label strategy. It's never to cannibalize the sales of our brand partners. It's always to see, hey, what are the niches that have potential to yield power SKUs? And then really sort of go into that so that the seller knows that we are basically helping them address a fundamental customer demand. So I think in terms of next steps, right, like the strategy for Reena is very clear. Double down in beauty. Our seller base has been doubling month on month since February. Double down on other categories that we see have characteristics that are similar to beauty. Find these small niches where we can really add value to the lives of the end customers we are serving, and then basically like use, like the supply chain relationships we have to ship great products.
Got it. Dr. Kati, let me come to you, and I want you to take one of the questions that we've got from the audience. And this is related to the fact that you're also an advisor for the Indonesian FinTech Lenders Association. During the pandemic, one of the sectors that has sort of seen Indonesia sort of come up, do well, has been the P2P lending. And that has been filling up the gap in SME financing over the last couple of years. But with the pandemic, a lot of borrowers have sort of been unable to pay back their debt, and individual lenders are sort of turning more risk covers. So I wanted to understand from you, how do you sort of see the future for P2P platforms in Indonesia? And also related to that, how do you think that such many of these platforms can stay relevant with the huge digital banking revolution that's playing out in Indonesia? For example, the Bank Jago and the C Group, their bank, they are competing with banks such as you. So how do you see this whole space?
This is a very important but tough question. First, let me try to address the first question first. Yeah, I think what happened to the P2P lending is not only unique to the P2P lending. That's also happened to the banking sector and all the business. Yeah, because many business, has been closed. They cannot sort of like sustain their operation. So, like it or not, this would be a sort of like the natural selection. Yeah, if you do your business relatively well, you're doing, in a proper manner, and then the possibility of you will survive is there. But one thing that I will say that it is important for the fintech, for the P2P lending. This is the one that I also mentioned during the fintech Indonesia fintech conference, that to see the opportunities. What are the comparative advantage for the fintech? Yeah, and it seems to me that one thing that even the banking sector cannot compete in the at the top level will be the credit score, the analytic, yeah, the data, because this will be very different. Yeah, so that is why the lesson learned from this experience during the pandemic is, number one, like it or not, maybe I'm, because my background as an economist, I'm an orthodox. I'm not a big fan of the so-called the GMV, the gross merchandise valuation, just looking for the gross. I do believe that profit matters. So like it or not, yeah, the lesson learned is somehow we cannot continue just to burn money, but we need to look at also the issue of the profitability. Yeah, if you look at what happened in the two companies merger, they start to shift their business more into the profitability as well. Yeah, so somehow this will help the companies during the pandemic. The second one is data. I mentioned to the many fintech companies, one of the business during the pandemic is a government, because there is no business during the pandemic. The only sectors that could move is only government. And then fintech could play a role on that, because they do have the data on the small medium enterprise. They do have the data for the social protection, on the credit score, and this will help the government in disbursing the money for the social protection. So I think the main message is we have to be very innovative under this kind of situation. Then the second question about how to survive with the digital banking. And I would say that not many digital banking is a real digital banking. They're still in the old conservative banking sector, but using the digital. When you are talking about digital banking, you are basically talking about the business model. Yeah. And then I can see fintech, the business model itself, it's the real digital banking. And they still have the comparative advantage because the data, because the analytic, because the credit score. But in the future, I do believe that three sectors should collaborate. You get the analytic from the fintech, you get the payment system from the banking sector, and you get the data from the telco. If you can collaborate those three, then I do believe that you've been doing very well.
Interesting. Jeffrey, let me come to you. I think about 2 months ago, you had produced a report along with Gurney in terms of which is titled "Unlocking the Next Digital Wave of Digital Growth Beyond Metropolitan Indonesia." One of the things that stood out in that report was that you said over the next few years, Indonesia will produce at least 3 more unicorns in the e-commerce space, lending space, and SME services space. Indonesia's GDP is about a little over $4,000, actually double that of a market like India. Half its population is below the age of 30, to close to 200 million internet users. And if you again compare it to India, in all the matrices, it's higher. But in terms of the number of unicorns, there are at least 15 sectors in India which have a unicorn, but when you sort of compare it to Indonesia, it doesn't have there's no unicorn. So is that the potential that we are actually seeing in a market like Indonesia, like 15 plus sectors which can produce unicorns?
Yeah, so maybe first I really want to address your points and comments about unicorns, right? For us at Alpha GWC, definitely we care about um, helping the founders to create unicorn, but we also equally care about what is the end state, right? We know some of the unicorns in India, for example, they become a unicorn, but when the investors exit, that round is not an up round, for example. We know some of the e-commerces, right? Yes, there is a unicorn, but what about the exit? If the M&A, what will be the end of that valuation? And to us, this goes back to your point about where is the second tier cities is the place where the momentum will be. For us, it's really important to understand that at the end of the day, how everyone in the ecosystem will make money, will create value, is really by creating a successful company. A successful company creating a great product that's solving a real problem that people will pay. That is the core in our belief in how we help the founders, right? So the second tier cities, and by the way, JJ here from Gudang Ada, Srijita and Reina as well, and to a certain extent, Anderson's Ajib is actually also operating in the second tier cities. They're the users also coming from not only the big cities, but also those cities, right? And we believe that is the big growth, source of growth will come from. We believe that Indonesia has a lot of potential. And we also chat this with Dr. Khatib, right? I mean, potential can remain potential forever, Dr. Khatib, right? I mean, what will be the catalyst? That is actually what's important for investors, for founders, right? We can still talk about Indonesia's potential for the next maybe 10 years if there's nothing is happening. And we believe that what will actually make a difference is the digitization, not only in the big cities, but also in the rural cities. I'm sure, JJ, especially your business is mostly in the second tier cities, right? I'm sure you have a lot of great stories to tell how, like the growth that you see in those markets, right?
Absolutely, yeah. I mean, like just a quick one. I mean, we're in 500 cities today, and actually, like more than 2/3 of the merchants, including wholesalers and retailers, come from like outside of the tier 1 cities. And so, just because of the product SKUs that we have on the platform and the kind of optimal pricing we have on our SKUs, we see that really generating a lot of growth for us. And it really becomes a flywheel ecosystem, because when we have the right product category and the right supply on our marketplace, and we're able to spread across and be generating demand from retailers nationwide, not just tier 1, but tier 2, 3 cities that Jeffrey is talking about, then more suppliers and more wholesalers and more principals ultimately want to list their SKUs on the marketplace. And that really becomes a really great monetizing system and a long-term stickiness that's going to be holding both buyers and sellers.
Yeah, and if I can just add one point here, if you ask me, based on our knowledge, what is the difference between the playbook in Indonesia or in Southeast Asia versus the other markets? I will say that our unit economics, our fundamentals are actually stronger. We've seen that in multiple industries, in multiple verticals. So, for example, in Gudang Ada's case, once they start monetizing, we really expect to see that a strong revenue that will be generated, and we already started to see that sign coming. And so we're really excited with what coming into the second and third tier cities, and we believe that will be a game changer for us.
Yeah, thanks, Jeffrey. Thanks, JJ. Just related to that, I just want to spend, before we run out of time, spend some time looking at another crucial, a couple of crucial elements that Jeffrey had mentioned, which is about exits, raising capital, the outlook for M&As. So in that context, like with you talked about, like Southeast Asia does have several unicorns, and we just saw the announcement earlier this week on Gojek and Tokopedia combining Traveloka. We sort of briefly mentioned that they should sort of be looking at a listing, so they will be unveiling the details soon. But one company that is the benchmark that everybody in the region has been looking up to, both its listing as well as stock performance over the last 1 year or 1+ years, is the C Group. So Jeffrey, how big has the C Group's listing plus stock performance been in sort of setting the narrative for Southeast Asia? Be it for startups, be it for existing investors, potential investors, for founders, for the ecosystem. And do you think a lot of the activity that we are seeing now, like the Gojek Tokopedia merger, the Grab SPAC, is all a reactionary move to some of the firepower that the C Group has accumulated with its listing and performance?
Definitely. So when we talk to investors, both investors in the companies or into the funds, it's really helpful to have one key benchmark like C Group. By the way, it's listed in the NYSE, right? So it's really important to have that kind of company to help to educate the market as well, the global market. So we really believe at AlphaJet, obviously, is all about really helping the ecosystem to grow, because everyone will benefit from it. And not only C Group, but we also see that some of this big news about the unicorns, the decacorns that are going for SPACs, for IPOs, merger. That is definitely changing the game. And as a result, when we talk, for example, we are Indonesia focused fund, and usually the Indonesia focused fund is one of the latest kind of category when global investors want to invest, because they usually start investing in the region first, and then investing in a country specific fund. But thanks to all these companies, they really understand that yes, we are country specific fund, but we are the largest, like what Pak Khatib mentioned, right? Is Asia is pretty much greater Indonesia, right? So that is really helping us a lot in educating the investors globally, and that's why it's really exciting time for all of us.
Got it. Dr. Khatib, just coming to you, sticking to the same theme, the upcoming exits that we should see towards later this year, which is a listing of Gojek, Tokopedia combined, the Grab IPO, the Traveloka SPAC listing, and several other SPACs which can potentially list from this region. How much do you think that these events will sort of shift the region's tech battleground? That's one thing. And a related question that I want to ask you is, like, if you look at all of these companies, be it Gojek, Tokopedia, or Grab or Traveloka. While they operate in certain sectors or several sectors, financial services continues to be a big part of all of these companies.
Well, first of all, I think this will shift the battleground of the tech companies in the region because, as I said, ASEAN is a greater Indonesia. Yeah. So somehow this will create a path for the companies about the exit. Because one thing that I'm talking about is, from the so-called the conventional, the traditional investor perspective. Yeah, if you are investing on this tech, the issue is the valuation could be realized when there is a liquidity event, right? So this is always the big question. Now, I think Gojek and Tokopedia can set the tone with the merger. Yeah, and this will inspire many companies. Yeah, that it's one of the possible option. Yeah, and then this maybe they will continue to go listing, and then some companies already go listing as well, like the case of Grab through uh, um, the special purpose acquisition companies, for example. Like that kind of model, I do believe that this will set the tone because Indonesia is a very large market. As the first one. Your second question regarding this, the financial service, I do believe that at the end of the day, when you're talking about this monetization of this program and you're talking about the e-commerce, the gist of the essence of this business will be related to the financial service, right? Because this is the room for the monetization. You do have the credit score, you have the everything, but at the end of the day, you need to go to a sort of like a financial service. And if you look at uh, you know the example of Gojek about the structure, they do have this attack. Yeah, I'm talking about this uh, network of the ownership. Yeah, somehow they are related to the telco company, they are related to the e-commerce, they are related to ride hailing, and they are also related to the banking sector. This will be the perfect combination that I mentioned, because in the future you need to have the collaboration between telco, between banking sector, and also the tech. So that is why when you mention about this financial service is still one of the most important, this is a very logical because this is the place when you can monetize your digital business.
Got it. For the IPOs that we discussed and you also talked about, what's the role of the Indonesian government to ensure that the IDX remains competitive? Because all of the tech companies are still talking about a US listing, maybe followed by a dual listing in Jakarta. What, in terms of what do the regulations, what changes are required so that it becomes attractive to list in an exchange like the IDX?
Let me answer your question, Joji, in a careful way. Yeah. Why is careful way? Because been there, done that. I was a regulator before. I had to admit that the regulator always lag behind with the innovation. Yeah, there is no way that regulators can catch up with the innovation. We issue the regulations probably 6 months after that is going to be obsolete, is no longer relevant. Now, like I mentioned about the special purpose acquisition companies, yeah, this would be something that probably shocked the regulators. Even SEC tried to scrutinize this SPAC. Singapore tried to adopt this. Indonesia tried to adopt it. But there is no way the regulators can catch up with the innovation. So the situation is there's always, I have to be very careful in using this word, a sort of like interaction between the player in the market and the regulator. So the regulators can learn about what innovation has been happening in the market. The ideal solution is the regulator should be agile. But this is very difficult because you would expect the agile bureaucracy. Agile bureaucracy, but it is an oxymoron. there is no way that bureaucracy can be agile. So that is why the interaction between the market player and the regulators is a very important, because this is really something new. We don't have the regulation before. When you're talking about this, you want to expect that IDX will be competitive like the New York Stock Exchange. We probably still in the States to learn about the SPAC, how to do a sort of like an IPO for the tech companies. And this is the thing that I do expect that player in the market, the tech companies can collaborate with the regulators, discuss with them, try to find a way. The best solution to this is maybe regulators should change their mindset from agree on rules to agree on principle. Because once they start to sort of like to regulate everything at the rules level will be very difficult. But they can do it maybe at the principle level.
Got it. Dr. Khatib, before you go, just one or two last questions to you, again, related to the role of the government, because you were closely, you were part of the government, a former finance minister. So just wanted to ask you, at what point do you see things like factors like ease of doing business, IP protection, or regulatory flip-flops, investor rights and protections, governance come into consideration, and if Indonesia has to become a powerhouse, where do you see the company on several of these parameters?
Well, first of all, that the government, the Indonesian government already launched the so-called the omnibus law, which is the idea is to streamline the regulation. Yeah, so I agree with you. This is very important to attract the investor to come to Indonesia. But at the same time, I will also say that the bureaucratic hurdles is an opportunity for the tech companies, because the solution for this is will be the online system. Yeah, I would imagine if you're talking about blockchain, you start with your ID in one of this one you sort of like you provide to ID like the through the blockchain system. In all the government institution, they already have your ID, right? So online can be a sort of like a solution for this. So in the one hand, this streamlining the regulation will attract the investor to come, but at the same time, this also create an opportunities for the tech companies to support the government program to streamlining the regulation by the online system.
Got it. Just one final question to you on, as a former finance minister, how do you look at issues like inflation and currency fluctuation? Because I'm sure that has an impact on how investors look at Indonesia, because investors are looking at dollar returns, while sort of inflation in Indonesia has largely improved, and FX erosion, we've not seen much in terms of, at least in terms of US dollar terms. But how do you sort of look at these issues going forward?
Let me put this way. I don't know, this is fortunate or unfortunate. I had to deal with the taper tantrum in 2013, similar like India, when the US, ended their quantitative easing in 2013. I do believe that the similar event will repeat again, probably by 2023, because once the US normalized the situation, they completed the vaccine rollout, everything, they should normalize their monetary policy. So a couple years from now, we will see that the Fed need to raise the interest rate. The long-term interest rate will increase. And we can see this indication from the increase of the treasury yields in the last couple of months. If this happens, then you would expect there will be a capital outflow from emerging markets, including Indonesia, including India, South Africa, Brazil, etc. Then you would expect the depreciation of the currency of the emerging market. Yeah, this is the thing that we probably need to expect a couple of years from now. Yeah, before it's come, let's have a party before the police come. Yeah, when you're talking about this inflation, the inflation will remain low because the weak demand of this pandemic. But once the economic back to normal, the mobility back to normal, we need to anticipate the possibility of the increase of the inflation. The similar situation, happened in the US. Look at what happened. The market player was shocked, about a couple of days ago because the increase of the inflation. Whereas in my view, this is because the low base and also the reopening after the vaccination. But somehow I agree, the risk of inflation of there, not now, but a couple of years from now. Similar to the situation, I do believe that maybe a couple of years from now, Bank Indonesia need to adjust their interest rate as well when the US start to adjust their long-term interest rate. So to me, if you're talking about these 3 years, this is the room for the low interest rate, stable currency. But 3 years from now, we need to be very careful because we will face the possibility of the volatility of market, especially on the currency, interest rate and capital flows. Hope this answer your question, Joji.
Thank you for those insights. We are almost running out of time, but I would request you all to stay in for an additional maybe 5 to 7 minutes because I just want to take like a couple more quick questions, especially to the founders and Jeffrey. Anderson, let me start with you. We were earlier talking about unicorns, exits, and all of that. Related to that, I just wanted to ask you your views on the next generation of leaders or founders. Southeast Asia finally, and especially Indonesia, we're finally starting to see second and second time, even third time founders or serial entrepreneurs emerging from this region. We're also seeing a lot of executives who worked at unicorns like Gojek, Tokopedia, Traveloka, JD now coming out and building companies. So in terms of quality of founders and also how much influence do you think this will have both in terms of the next generation of companies that are built here and also investor interest in terms of quality companies emerging from Southeast Asia?
I think that there's no better time to be a founder or to join an early stage tech company than right now. Because I think that, the reason why a new startup exists to me is because there's a white space opportunity created by shifts in trends or consumer behaviors that can be taken advantage of by some tech angle, right? And boy, does the COVID really accelerate changes between customers' behaviors. It affects macroeconomic and all these things, right? So I personally see so many opportunities left and right that I say, gosh, if I can clone myself, Anderson will be doing these 2 startups all at once, right? And at the same time, because of all these IPOs, there is a mass exodus of tech talent and engineering talent coming out of these unicorns who's looking for that early stage experience again and have that thrill of building up a company really quickly. And so I think that combination of really good talent and potentially really good ideas and opportunities will create a very interesting next generation of companies coming out.
Interesting. Srijita, let me come to you. A related trend that we are seeing is a lot of foreign talent sort of coming to Southeast Asia, especially Indonesia, to build companies. Just like you, there are several Indian founders, many of them who've got an exit in India, looking to build in Indonesia. Just want to understand from you, how do you see the whole thing play out, and how can entrepreneurs sort of create the right teams in today's environment, sort of a unique blend between sort of local and foreign talents and like building multicultural teams in Southeast Asia?
Yeah, absolutely. So I'm glad you asked me that question. So yes, there is an increasing trend in Indian entrepreneurs starting up in Indonesia. And the reason is very simple. A bunch of us were part of like a once in a lifetime shift to e-commerce in Indonesia, right? In India first. We witnessed that in India and we saw how powerful it was, right? So just to give you some context, I joined Amazon in India even before it was launched in 2012. And I really saw the rapid growth that e-commerce and the rapid tectonic shift in commerce that e-commerce could create. And similar to what Anderson was saying, once you're part of that shift, that is a feeling that you want to sort of replicate again. And when I was looking to start up after my last company, I looked at India, I looked at Indonesia, and Indonesia was very exciting because a lot of the trends that we'd seen playing out in India, I saw them playing out in Indonesia now, right? So it was really an opportunity to be part of like 2, like big once in a lifetime changes in ecosystems, right? Which is very powerful for an entrepreneur who's always looking for opportunity, right? Now, it's a great question in terms of like multicultural teams. So when I think of teams, there are 2 aspects that I think of, right? Like one is your board, right? Like your board ultimately is your team. They're going to sort of influence, they're going to have a very strong influence on your decisions, on your strategy, on your prioritization, everything.
And I think there we at RENA have been very privileged because we have a great mix of Indonesian as well as foreign investors on our cap table. And with that, we're able to get unique insights, local insights, that me as a foreigner could not have, as well as, we're able to learn. So one of the other investors that we have on our cap table, Alpha Wave, is part of Falcon Edge, which has done like early to growth stage deals in India. So from them, we're really able to get sort of the reasons behind why certain models have not worked in India. And from AJWC, from AC that's on our cap table, we're really able to kind of get very detailed insights into the Indonesian ecosystem. The second thing that's very important is just access to talent, right? And the networks that having a local partner opens up. Right? So we work very closely with Alpha JWC in terms of sort of building our team, thinking about culture, all of those things. So I think my message to entrepreneurs who are foreigners and who are looking to sort of tap into Southeast Asia and the shifts that we're seeing here would be to be very cognizant of, like who you're bringing to the table, right? And just make sure that you have diverse voices, diverse sort of mix of opinions, so that you're doing what's best for your company and you're building the company with all of these diversity of opinions into the decisions you're making. Yeah.
JJ, let me come to you. Another interesting trend related to talent is that we're seeing a lot of ex-founders who build companies in the region. Many of them are turning investors. Some of them have set up their own funds. Many of them have joined VC or PE firms. So from your experience with two different companies and also having raised capital and continuing to raise capital, has it helped that many local and international funds now have ex-founders in their teams? And also, if you look at these investors who have founders in their teams, do you think they've been able to do better value add to their portfolio?
Yeah, great question, Jojo. So the short answer is absolutely. Let me explain. So I think it's the same reason why we've seen financial investors, PE, VC funds, increasingly, like adding operating partners or to further deepen, or ex-founders of businesses to further deepen the bench. Especially when you're talking about Southeast Asia, which comprises of several different countries and markets, and the value add for investors experience with companies is oftentimes very tangible. Yet about internationally renowned funds continuing to play a key role beyond operating expertise by acting as information and network bridges that linking the Southeast Asia based startups to global business models and network, which obviously in itself is tremendous value add. In a nutshell, I would say gone are the days where value add primarily derives from just capital and opening doors for networking purposes to investors. Don't get me wrong, obviously those are very, very important, but those are the prerequisites, right? Companies and founders today are turning their attention towards like who's the investor that really understands the issues that I face? Who's the investor that really can work with me to help me de-bottleneck? Who's the investor that's going to be sticking with me through the good and the bad times? Because that's what we're going to go through as founders, as startup entrepreneurs. In that regard, I think investors with operational expertise, along obviously with investment and financial acumen, and will follow and founders remain the most highly sought after.
Sure. Jeffrey, the final question for this webinar is to you. I wanted to ask you we were talking about exits and related to exits, how important is capital recycling, especially for Indonesia and Southeast Asia? Be it founders, CXO level executives, be it investors, be it LPs. Only if they sort of get their money back, some of it can be recycled into the ecosystem. Capital recycling, even by a lot of founders, is very common in markets like the US, China. It started taking off in India. Where do you see Southeast Asia place? That's one. And the second thing that I want you to talk about is with a lot of global companies looking at this region, do you think in terms of exits, it will be largely, there will be a few mega IPOs, but otherwise it will be largely driven by trade sales and M&As?
Yeah, so first of all, it's extremely important because at the end of the day, we need liquidity, right? Every one of us need that. So that's really important. And then once we get, some exits, whether it's from exits, from ESOP, from investing, that will definitely goes back to the ecosystem. So it's extremely important. Like I said, we are actually experiencing quite a lot. For example, I think last week there's just an exit announcement on one of our investment in Vietnam. So that is an M&A, and then it's actually a pretty good exit for us. So we believe that exit will only accelerate. But one thing that I would like to maybe point out that's actually more important than the mega exits. What will be more impactful, I think, or at least equally impactful, is also the smaller exits, right? And the smaller exits not only through M&A, but small liquidity that the employees, the early employees in the unicorns or in the later stage companies, some liquidities for the founders, some liquidities for investors as well. So those are actually equally important. Yes, and why I want to highlight that is because that will not be in the news, right? But that will actually add to the confidence of everyone in the ecosystem. And you guess what? Once these early employees, investors, founders, when they get those money, they will put it back to the ecosystem. So that's actually crucial, and we are seeing it right now.
Got it. We are exactly 10 minutes past our time. Apologies, we overran, but it was like a fascinating discussion. There's still a lot more points that we wanted to cover, but we could not. Thank you all for sending in the questions. What we will do is all the remaining questions that we couldn't take, we will send it across to the panelists so that and get it answered, and we will post it on our site or send it out as an email to you. Sorry, we couldn't take all the questions, but to all my panelists, Anderson, Jeffrey, Srijita, JJ, Dr. Khatib, thank you so much for taking the time out, and thank you for the fascinating discussions that we had. It was great listening to you. And to all our audience, we will share the video in full, and we will also share the transcript in full. So if you sort of missed out on anything, we'll make it available next week. Thank you for staying on. Wishing you all a great evening, and hope to see you for our next webinar sometime soon. We don't have a date yet, but hope to see you soon. Thank you so much.
Thank you.
Thank you. Thank you.
Thank
Thank you
you.
so